Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Thursday, March 14th, 2024.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
Let's take a look at the charts. I'm going to start with the big picture as always. And the big picture is really important right now because we are approaching a big picture support level that's been an objective now for the last week or two. I'll get to that in a moment. But nonetheless, 165.85, a base of long-term support, channel support that goes back to the July high of last year. So that is a solid 8 months in the making. We tested the top of that channel back in late December when it was in the low to mid 260s, now 248.79. At that time, we'd mentioned how you should prepare for or could prepare for a 165.85 channel bottom target within 3 to 5 months. It took about 2 months or so, a little bit less, to actually reach that about a month and a half ago. We're right back at it again, and that was indicated. I'm looking for the right chart. It was indicated about a week and a half ago when we settled below this speed line at 193.41. There was also a channel bottom that we settled below the very same day. And so that has been the target for the last week or two. We're a solid week and a half into it, and we will probably test that today, I think. 166.26 is the daily chart version of the 165.85 weekly chart version. And what was I going to say here? There is the 1% zone. I did want to kind of drive home that point. I don't show it here. 167.92 is a minor point. That is a trend line that we're not showing. But 167.50 is the 1% zone of the 165.85 weekly channel bottom. So just know, and I'm not encouraging aggressive buying here beginning at 167.50, but that is the beginning of the buy zone. And we are certainly approaching it. The 165.85 to 166.26 region, able to absorb selling not only through next week, not only through April, but even through the second quarter. And once tested, or you can now say above which, because we have already tested it, this 248.79 formation in reach over the next 3 to 5 months, despite the fact that it does not look like that this market wants to test that area anytime soon. But that would change if I can jump into the midterm outlook. That could change and would change with a settlement above the 203.26 to 212.49 region. So this is our 3 to 5 week time frame. Talking to 3 to 5 week swing traders, 2 to 3 week swing traders perhaps. Bottom picking 165.85 would allow 203.26 to 212.49 over the next 3 to 5 weeks, where we could top out by that point in time into May activity and fall away again. We do need to close above this narrowing band of resistance between 203.26 and 212.49 to indicate, to actually reverse momentum, or at least shift it into a bullish dynamic that over the following 2 to 3 months should then yield this band of resistance that's now at 248.79 to 255.82. But once again, and I do want to always paint the big picture. If you're bottom picking 165.85 and you're more of the near-term investor, like the 3 to 5 month near-term investor, you can bottom pick 165.85 to 166.26 in anticipation of the upper 240s and dropping, and you'll breathe a sigh of relief on the way up once the market does clear this 203.26 to 12.49 region. Now, I'll just jump to the downside that if we do close this week tomorrow below 165.85 by the required 1% margin for what I would consider to be a technical reliability, that would be a 164.20 settlement or lower on Friday. That would then set up for another significant long-term sell signal. Over the following 2 to 3 months, I would say 3 to 5 perhaps, but I'm going to say more like 2 to 3 months, we fall into the upper 80s, the low 100 region. That would be a zone that could contain quarterly selling pressures, but I call that a 2 to 3 month target. So, if we close Friday at 164.20 or lower, no good reason to be long Tesla. Really, any which way you look at it, unless you're sort of this long-term buy and hold investor and you bought a long time ago, let's say. But if you're 3 to 5 months or narrower, I don't see a good reason to be long Tesla, at least early in the process of a settlement at 164.20 or lower. On the way down, I would expect this descending channel bottom, and we will be mapping this out on the daily chart on a day-by-day basis if we get that sell signal. But right now, I would say 3 to 5 week sell signal down to 134.29, where we could get a nice bounce or at least consolidate for a spell before continuing south again. So that is the kind of the 3 to 5 week objective. I can also show on the daily chart the same is at 132.14. If we close today, and really not just today, but the week itself at 164.20 or lower, we've got 152.37, which is this like April, May of 23 pullback low, significant pullback low. I consider that to be a weekly support level. We could bottom out there for a week and back up to this channel where the market could top out, longer term. And that would be the dynamic. But we're not there yet. I'm painting a possible scenario, the what if scenario. What if we close below 165.85 Friday, the week itself, by the 1% margin of 164.20 or lower? Let's cover the day itself. You know all about 166.26 and 165.85 as your bottom picking area. We're very close to that, right now. And so our next resistance, now, if we drop today and test 166.26, this formation will need to be reconstructed, need to be readjusted. But for right now, let's say that, the 169.15 low that was put out, on Wednesday, that we don't even retest it. We open higher, we start higher. 180.14 is your sellable resistance. I don't know if we'll see it today, but if tested, your sellable resistance for the day and through the rest of the week. And from here, we can fall back within 3 to 5 days to 166.26. Now, under other circumstances, I would consider this a 3-star weekly resistance area. But I'm keeping it as session containment only because of the fact, if you put it in the proper context, we are in fact now testing or very close to retesting long-term support in the mid 160s. So coming off of that, I really don't want to sell the market aggressively because I think it is then inclined for meaningful recovery. Meaningful recovery once again over the next 3 to 5 weeks into this 203.26 to 212.49 region, and over the next 3 to 5 months into the 240s and dropping. So let me go back to this chart here. If we happen to close above 180.14, I think that is a momentum reversal event into next week. The next 3 to 5 days perhaps could yield this 193.41 to 196.33 region, a convergence of this former speed line that we settled below almost 2 weeks ago, and a newly formed descending channel top that is based on the lows over the last week or so. This area can contain buying the low to mid 190s on a weekly basis. You can see that up here we've got 3-star resistance. But I will say that if we close above 180.14 and you're a 2 to 3 week position trader, I think you're going to have to endure some patience here in the low to mid 190s. We could fall away from here, but I do think that after having tested long-term support and closing above 180.14, if you haven't gone long already, you could go long then in anticipation of this 203.26 to 212.49 region within probably about 2 to 3 weeks. So yes, closing above 180.14, I would get that there it is right here, the 203, 212 region. It's it's hard to actually reduplicate it on the chart, but It's in this zone here. So if we close above 180.14, I think 2 to 3 weeks is realistic into that 203, 212 region. Is there anything else to say? I will say that if we break 166.26, 165.85 actually in the weekly chart, 163.91 in reach. And once again, if we close, it really is tomorrow. Now, if we close today at 164.20 or lower, I personally think that if you're bottom picking the market, you should get out by the closing bell. Because you never know what may happen Friday. We could gap significantly lower, and then the market just continues to cascade as we move into April trade. So if we close today, Thursday, 164.20 or lower, my suggestion is to be exit your long positions. You can get back in if we close then above 165.85 on the week itself, or perhaps better yet, we close any day above this newly formed descending channel top. I think this will be a meaningful upward pivot point as we move through the rest of March, given the fact that we are now presently in the process of retesting long-term support. I don't think there is really anything else to say. Please click like, share, subscribe. Check out wickedstocks.com. I'll be back tomorrow with Friday's Tesla report, and you have a great day.